you seeing demand change in terms of what BMS is seeing in response to climate change? Are you seeing more different buyers come in, different demands?
Different demands, yes. I mean, we're entering quite an interesting market now. So, of course, the market dynamic where if you go back over the last sort of 4 or 5 years, I think the London specialty market was at the forefront of most of those large global placements outside of reinsurance. And those domestic markets are now leaning in a lot more. So there's pricing pressure, no doubt, particularly on property cat. But I think as people use data and use AI to their benefit, boards are seeing the opportunity, and risk managers and risk committees, to look at ways that they can buy more cover. Yep. And it goes back to what we said earlier. Is it affordable? Is it actually practically affordable? Yep. So I think in any given world, people would love to buy more. A really good example is something live with us at the moment, which is in the Caribbean. Yep. Which is, cat capacity in the Caribbean is still very, very limited. And so the buyer is buying a minimal amount of cat capacity because there is just not enough capacity globally. So again, are they underinsured? Probably. Do they need to do more? Yes, they do. Do we need to do more? So any form of alternative capital that we can source into the market is a must.
And are you finding insurers and reinsurers more open to those conversations, or is it still quite?
Again, I would say because of where we're going in the market now and the speed at which we've seen pricing decline across multiple sectors, those conversations are quite challenging now. I think people are almost, dare I say it, reverting to type, doing what they know best, sticking to what they know best. And actually, we've got to keep pushing for that innovation, keep pushing for more capacity, keep attracting more capacity. We need more of that.
Again, a question you're not prepared for potentially, but if we were having this conversation 10 years ago, it would probably be more about the decline of the London market and how it's losing its relevance. How do you feel the London market is today in terms of relevance and capabilities and strength compared to 10 years ago?
It won't surprise anybody that knows me that when I answer that I'm a huge fan of the London market and everything it stands for. I mean, some of the, I openly questioned some of the development that's been coming out of the corporation around what Lloyd's should be concentrating on, where Lloyd's should be focusing in terms of attracting new business to the market. We always have been and always will be a specialty market. We are very, very good at it. We have a phenomenal talent, phenomenal skill set, phenomenal knowledge. Come back to that later in terms of the concerns about that knowledge and and where that may go in terms of retirement over the coming years. But we need to sell more of that. Okay. We need to. I often in my conversations with the corporation say, we are so recognized as the nerve center of the specialty market. We need to do more and more of it. And rather than diversifying where we go to attract our business, how we attract that business, let's just recognize what we're really good at. And I'm sure you're going to come on and say, well, what am I going to concentrate on in terms of BMS over the coming years? I say to all my guys, we keep it simple. We know what we're really good at. We know what we're recognized for, and let's just do more of it. So I think the other point about the specialty market and London in particular, 10 years ago to now, is huge influx of new capital. Yep. So you think of the private equity world, the sovereign wealth funds, et cetera, that piled into a market when we were living in a bit of a bubble. We were living in a post-COVID bubble where, we saw a rating environment, interest rate environment, inflation, everything was running in our favor. Everything was running in our favor for quarter on quarter for the best part of 4 years. And what I think is really interesting now is that capital shied away from the balance sheet. They shied away from the carrier side, and it became an insatiable desire to get onto the distribution side, and of which we benefited, no doubt about it. I think over the coming 6, 12, 18 months, that appetite is waning. There are some challenges around organic growth. There's some challenges around the rating environment. And actually, you look at M&A in the market, M&A in the broker sector is really focused around 2 or 3 of the larger brokers now. M&A has materially dropped back to levels that we haven't seen in the distribution space since 2017. Right. Whereas on the balance sheet side, case in point, it seems to be increasing. So I wonder whether that capital is switching focus.
And what does that mean?
Well, I'm hoping that will bring more capital into the market. Now, on the one hand, everyone's going to say, well, that's increased competition. Yeah. That's just going to drive down pricing. But if it's directed at sectors of the market that we all agree we need assistance in. So be that cat, be that life insurance, because again, penetration in life insurance is next to nothing. That has to be a good thing.
I agree.
And it's not naive capital. I mean, this is capital that's been around our market for a while. You could argue that 4 or 5 years ago they became a bit gun shy and they got burned. They will deploy sensibly, and it won't be broad brush. So that is going to be a challenge. And alongside that, just the whole distribution space is changing. Those tectonic plates, Adrian, are really shifting now. There's a fundamental underlying change in distribution now.
In what way?
So M&A has been a major part of that.
Yep.
I remember
It's been the story
forever. Yeah. And look, we've been a beneficiary of that too, but in terms of increasing our distribution. But I think the fundamental change now, someone said this to me, a senior market figure about 15 years ago, that from a distribution perspective, there would be 12, maybe 15 global brokers that command distribution from cradle to grave. So what do I mean? But that is from MGA through to reinsurance, through insurance distribution, wholesale, and you look at what's happening around us, and that is exactly what's playing out. And in the independent sector, there are you look at the top 20 brokers globally now, these are very, very large, multifaceted global distribution businesses. And there is an insatiable appetite in the MGA space, there's an insatiable appetite in the London market specialty space. So the independent London market broker, which you will remember when you and I started the market, there were literally hundreds of them. They will still exist if they're in niche mono lines. They will still always exist. But that broader specialty broker in London is now is definitely challenged. And I think that distribution now wants to own the distribution in London and further afield. Facilities, AI, data is only increasing the speed at which they're looking to access other markets. So that will just condense. It's going to condense even more. So some believe it's the end of the independent wholesale model. I don't. I vehemently don't. And that wouldn't be strange for someone like the CEO of BMS to say. But I think we have reacted to that by increasing our own distribution.
Yes.
We are not just a specialty broker in London. We are a global broker, insurance and reinsurance. But the avenues of access are narrowing and narrowing quickly. And I'm not sure that's healthy for this market. So that is a challenge for London.
Is it a challenge for the independent London broker, or is it a challenge for the London market per se?
I think the independent London broker will always exist. Another example could be, and perhaps this is a good one, if this was 10 years ago, with all the M&A going on, I'm pretty convinced with the capital world that we were living in then, you would have seen a ton of startups. So you would have seen a number of people raise some capital, not a lot, you don't need a lot to start a broker, a lot to then build the next independent broker of scale. Why has that not happened?
That's a very good question.
So I think there's two reasons. I think one is access to capital, and the financing is harder now than it was, and pricing is at a different level than it was. So that's the first thing. The second thing I think is it comes back to the demographic, the age demographic of the market. So whether it's underwriting or broking, we're all facing a situation where in the coming decade, there are going to be a ton of people that are retiring. And there's a great knowledge and entrepreneurial spirit that I think will be leaving our market. And not just London.
People have been saying that since I started.
Yes, but perhaps you and I are getting closer to that stage. Who knows? But I do think there is that day is coming, because I question why the next generation are not looking to create that opportunity. And a lot of it comes, again, we may or may not talk about it, but when you talk about the talent across the London market, what's driving a lot of the younger talent today is less of that sense of entrepreneurialism. It's more a sense of purpose. It's, why am I turning up to work? Why am I doing that?
That's a very good
Why am I in this industry? Why am I here I want to make a difference.
Because we are attracting young people to the industry.
Well, I'm glad you said that, because it drives me mad.
When
I hear everybody else saying we don't.
Oh,
you do. I think absolutely. I couldn't agree more. Seriously. I'm and again, this is where I bang the drum non-stop. I think we've done an incredible job as a market, but individually as separate businesses to attract some unbelievable talent.
Yeah.
And I can only judge that in a really selfish way. I can judge that by the number of emails and text messages I get from all sorts of people from all around the world who suddenly are desperately keen to get into the insurance industry.
Yeah.
And they are from all different walks of life and different industries and different backgrounds. But, dare I say it, as the insurance industry suddenly becomes sexy, but it's definitely, people are realizing that it sits in the center of everything that makes the world go round and round.
Do you think one of the reasons why perhaps there have been a couple of startup London brokers in the last 5 or 6 years?
Yep. A couple. Yeah.
And do you think perhaps why there haven't been more is, and because you could say the same thing on the underwriting side, there were a few startups in the late teens, and
yes,
some of them have done quite well. Some of them have done extraordinarily well, but there seems to be a need these days for scale quickly.
Scale, agreed. Yeah.
And so if you're going to be a startup, it's very difficult to be a small to medium sized startup.
Yeah.
Everyone wants you to get to $1 billion or $2 billion or $3 billion.
Yeah.
And do you think that's putting
very much so? And I think in the distribution space, you look at the top 20 global brokers, and they're not necessarily global, but they're deemed themselves global brokers, and then look at the next 20. The difference is, and we'd be hovering around that top 20 with revenues of $500 million, and then you look at what's above you. We're talking about multi-billion, multifaceted, and so and particularly in certain lines of business, scale really does matter.
Yep.
So, for example, reinsurance.
Yep.
On the reinsurance broking side, it absolutely does. So why are there very few, if any, independent reinsurance brokers without a global retail network? There's a very obvious answer. It's hard to grow into that space. So it's not impossible, but you need to be very, very focused. So I think, yes, it goes back to that comment that individual made to me 10 to 15 years ago. There will be 15 global brokers of huge scale.
Yeah.
And that is absolutely what's playing out in front of us.
Yeah.
There still has to be a role for that niche play. Not everybody can be experts in all those different lines, and BMS is no different. We are in about 5 or 6 classes of business. We're very deep in our knowledge and our expertise, but we're not all things to all people, and we make sure that everybody understands that. But where we can compete, we are absolutely at the very best. Now, what we decided to do 10 years ago was recognize the pressure that was coming in the specialty market in London. And as I said a few minutes ago, we needed to broaden our own distribution. Our distribution channels.
You were less reliant on third parties for everything.
Yeah, absolutely. And we still have phenomenal third-party relationships, and long may those continue. But the piece that's really increasing at a rapid pace is our own network and our ability to source our own business.
Got it. Now, you could argue
Yep.
that against the backdrop of that, the world is becoming riskier,
Yep.
complex,
Yep.
new risks are
Yep.
emerging. And actually what was specialty 30 years ago isn't specialty today.
It's BAU, P&C business.
BAU, PNC.
Yeah.
So
Yeah.
D&O,
Yeah.
for example,
Yes. Yeah.
was a highly specialised subject
Yeah.
when you first
Yes.
started.
Yeah.
I'm a newcomer to this.
As far as I'm concerned, it's still highly specialised. But yes, yeah.
But it's much more well understood these days.
Yeah.
But there are new risks which are much less understood. Carbon credit insurance.
Yeah.
All sorts of stuff around transition, and M&A insurance to a certain extent. So
Yeah.
do you think part of it is because we haven't adapted to figuring out what the specialties of today should be and where you can really carve a niche?
Well, it goes, and again, everybody has a different view on this. So are we truly innovative as a community? And I think there's a lot of good stuff going on. There's a lot of people forward thinking and trying to react to all of these situations, but everything is moving so fast.
Yep.
I feel a sense of nervousness around, the globe just generally.
Yep.
You look at the geopolitical climate that we're currently in. So everyone's feeling a little unsettled. And is that in it? So again, it goes back to that's an opportunity for us all.
And
Has to be
political
for an
risk
opportunity for us all.
It's one of the businesses we have, which is growing at a rapid rate.
Yeah.
Genuinely special.
So one of the other, I think for brokers, one of the key things around innovation is you need investment in capital.
Yes.
And that's both non-financial and financial resources. And so you need the talent. You need some very, very smart people to think out of the box, but you also need, significant financial resources. And there's always a challenge of balancing back to what I said. You know what you're really good at.
Yep.
You know where you can really add value, where you can enhance the customer experience and really focus on your customer. At the same time, There's all these unknown developing risks over here, which need R&D, time, research, and capital. And there are fewer firms in the ecosystem that can do that. Which I think it's not an excuse, because we need to find another way of doing it.
All right. Where do you think insurance can make the biggest difference?
Well, deep question. In all seriousness, I think, back to what I said earlier about purpose, yep. I think we spend a lot of time internally looking at our purpose and what we're trying to do for communities and businesses, and that really resonates. I talked about penetration. I think we can do an awful lot more around helping local markets, local regulators, local businesses and communities have access to insurance, and that's a must. We must do that. Talent. You and I agree wholeheartedly that we've done a great job. Can we do more? Yes, I think partly let's be our own. Let's get so much better at our own PR. We're doing a fantastic job. Yeah. And I think in certain territories around the world, they're probably doing a better job. So we need to continue to hire that talent.
Insurance makes things happen.
It makes things. This world does not go around without insurance. It's taken us a long, long time to make people understand that and accept it, that nothing works. Lights don't go on. Cars don't drive and anything else. So I think from that perspective, we just need to do a lot more positive PR around the value add, the purpose of being here, why we're here, and it resonates with the next generation. It really does. So, in terms of selling this as a career to someone, we are far from dying on a vine here. There is opportunity everywhere.
Yeah.
Opportunity everywhere. So embrace it.
Okay, last question. What is on your agenda this year, Nick?
I think, as I said earlier, Adrian, we're going through quite an interesting market. So we are sort of reviewing strategy. We've got a strategy day coming up in a couple of days' time. We're looking at where the areas that we want to invest in. We pride ourselves on the service, the world-class service we give our customers and our clients, and that's because of the culture that we've built. And I'm immensely proud of everybody that works at BMS, and that's what I want to protect. So it's about retention of talent in a market that is very fluid. Again, lots of M&A going on, lots of opportunity for people to move around. So protect our culture so that we can protect the world-class service that we offer. Double down on what we know we're very good at, and fundamentally keep it simple. So as we enter a tricky market, I think my mantra to my guys is, let's keep this simple. We know what we're good at. We know where we can add value. Let's not get ahead of ourselves and suddenly think we're all things to everybody. But it is our business, and I say this to everybody, I think is a very simple business, because it all comes down to your people and your talent. And we've done a phenomenal job at retaining that and being able to attract some of the market's leading talent. And that's my job. That's my job for the next 12 months.
Fair enough. Nick Cook, thanks so much indeed.
Thank you.